Hello and welcome to NDTV Profit. I am Vikas Srivastava, and today we have with us Mr. Amit Uplenchwar. He is the Director, Kalapatru Projects International Limited. Today he will be talking to us about the company's growth plans, business outlook, both international as well as domestic. Welcome to NDTV Profit, Mr. Uplenchwar.
Thank you so much, Vikas ji, and to all your viewers, a very happy upcoming Christmas and the New Year season. And thank you for having me on your show.
Yeah. We know a lot about your business in terms of EPC and other contract projects that you'll be doing in India as well as abroad. Can you, for our audiences, tell us how your EPC business is doing or the business outlook is in terms of this vibrant economy that India has seen, and also globally, despite recession talks and other things, we have seen that your order book position has improved. So what's the current scenario right now for Kalapatru?
So I think it's an interesting time, especially for India. And as everybody keeps saying in every interview, everybody is long India. If you look at our economic survey and the results that came for GDP growth, etc., we have surprised even every forecast out there by having, in excess of 7.5% GDP growth, which was completely unprecedented. Yeah. And if you see the breakup of that 7.5%, a lot of that came from manufacturing. Now, it is very heartening to know that India is finally, after several policies like Atmanirbhar Bharat and Make in India, which took time, but now the effect of all that, once the factories are all ready and the production has started, you can see that a huge contribution from manufacturing has started happening in India. And that's good for us, because as this expands, you build more factories, you build more housing, and that multiplier effect on economy has something to do for every sector that we operate in, right? And so from that perspective, this India's stellar growth, and it seems that for the next several quarters, this growth will continue. And so from a macroeconomic perspective, I think the outlook is very bright for our country. And we being a very large EPC contractor in India, in the top 3 in the listed space, I think definitely that augurs very well for Kalapatru projects as well.
Right. Recently, you all had this merger of JMC and your transmission business. So how has it panned out for the company? How's the growth been for the company, after that?
So our rationale for merging the two companies was very clear. They were in 3 different segments each, and then there were some sub-segments, but key 3 segments each. And whilst they both had grown to scale, JMC was constrained by its balance sheet, and Kalapatru had a huge presence outside India in more than 70 countries. And I think the synergy of these two companies coming together, which was seamless, whether from a governance standpoint or from people standpoint, has been absolutely on point as we planned it to be. As a result of this, we've had some immediate benefits accruing as a result of this merger. And those are the obvious ones. So our interest cost in JMC, which was 200 basis points higher or thereabouts, has come immediately as a saving to the combined balance sheet. Okay. We were constrained to go internationally with the JMC divisions in order to secure very large projects or complex projects because of the constraints with the balance sheet. But now, since this merger was effected, we've had our civil divisions, our water divisions, they have gone overseas as well. So we've got a very large EPC airport in Maldives that we are doing, where we are doing both, the air as well as non-aero revenue. We are doing a jetty, which is a part of that development. We are doing data centers. We are entering new segments in our urban infra division, which is the underground tunneling, metro, etc., which are highly complex projects, require large capex. And this all has been possible because of the merger of the two companies, making it one of the strongest balance sheets in the country today in our segment.
Okay. You spoke about some of your verticals. Can you talk about or throw some more light on some of your core verticals? And I also got to know that now you're planning to enter into manufacturing. I know you're setting up some new lines there, and you also spoke about your metro. So if you can give some more details on that.
So, our core segments have always been in transmission, both for lines as well as substation. We've been, growing steadily and in the water segment. We've got our railways, we've got oil and gas, and we've got urban infra and the building and factories division. So these being the 6 core divisions, and then we have manufacturing which supports all of these divisions from viewpoint of either fabrication or towers or steel, girder fabrication, etc. Our water business now we are there in all segments. So we are there in irrigation, we are there in networks, we are looking at STPs, we are looking at desalination plants. So we've grown into a sizable water business with order book in excess of 12,000-14,000 crores. And that has good visibility in terms of revenue and being a growth driver for us. Building and factories, again, there has been an explosion in terms of the kind of building projects that are coming. All the buildings are new data centers. It's a new segment that didn't exist 3 years ago. We are already building a very large data center for a sovereign wealth fund out of Singapore, and several other such projects are in the pipeline. We are building material handling plants because there was a lull for several years in terms of large steel plants or material handling steel that didn't happen, and now all that capex has started also happening, as a result of which we are one of very few players in India which do large material handling plants. So our building and factories division is also thriving. The order book is at an all-time high. We are practically present in most states of the country. Urban infra, we are doing the elevated metro for Kanpur. We are hopefully favorably placed for some underground metro using a tunnel boring machine in one of the large metro corporations, and hopefully we convert that sooner than later. We are looking at bridges, we are looking at marine structures. So all of those segments in urban infra is something that we are very aggressively working with. We've got a railway segment which is expanding. Our transmission in India has gone through, after a 2-3 year quiet period, now the projects are coming because large renewable energy plants in line with our vision with COP28. So we are building very large renewable facilities which are far away from cities, and in order to connect them with the main grid, large transmission line projects are happening in Gujarat, in Rajasthan, in Karnataka, all across the country. And we, being one of the largest manufacturer of towers and also having the most experience in building EPC for both transmission as well as substation, we see a very large opportunity set and outlook over the next 3-4 years looking very solid for our transmission business, both in India as well as internationally. Our oil and gas, we've been working for the last 6-7 years trying to qualify ourselves in major international as well as national oil companies outside of India, and that is bearing fruit. We are now in 7-8 very large geographies in the Middle East and Africa where we are already qualified as an EPC contractor for oil and gas in quite a few segments. And we've been bidding steadily for Saudi Aramco, for ADNOC and some other international oil companies, and hopefully we should be able to get some orders there as well in the quarters to come.
Which are the segments in oil and gas where you are bidding for?
So, oil and gas is upstream, midstream and downstream. So upstream being oil or gas being taken out of the ground. So that is an area that we are increasingly building our capability, both from an engineering standpoint, people standpoint, and we are bidding for those projects in Middle East. Pipelines is something that we've been very strong traditionally. We're one of the largest pipeline contractors in India with one of the largest fleet for both HDD as well as pipe layers in the country. So that is something we'll continue to focus on. We are also looking at downstream units for fertilizers, for other parts of refineries in the downstream segment, be it for MRPL or IOCL, etc. And we continue to bid for those. So we are present across all three: upstream, midstream, downstream of the oil and gas segment. We are also looking at newer forms of energy. So today the energy basket has expanded from just being oil and gas to also hydrogen, some of the other areas. And clients being the same, so today if Indian Oil is doing a hydrogen plant or a refinery, we can also look at those areas, and we are keeping a keen eye on how those projects are developing, and hopefully be a part of that in the quarters and years to come.
You also spoke about entering into manufacturing lines, and you all are setting up some new manufacturing lines. Can you throw some light on that?
So we've, as you're aware, we have in Raipur and Gandhinagar very large capacities in terms of building towers for our EPC business. And as our building and factories division is becoming very large with revenues in excess of 4,000 crores per year and growing steadily at 15-20% year on year, we are also now looking at manufacturing scaffolding, which we used to take from outside now to do in-house. So we set up a state-of-the-art scaffolding manufacturing line at our Raipur factory, and hopefully now we will start servicing all of those requirements in-house. We are also setting up, in fact it should get inaugurated by December, a very large steel girder fabrication manufacturing line where we will look at all the segments of, be it high-speed rail, railways or other bridges, etc., where very high capacity and voluminous steel girders need to be fabricated. So that's a new line that should open by Q4 of this year as well. And so this is some of the expansions that we've been doing over the last year or two in our manufacturing area of, our vertical in manufacturing.
You spoke about several new manufacturing lines that you are setting up and new businesses that you plan to enter. This will require a lot of investments. On the other hand, you are also an EPC player where you are getting a lot of orders internationally as well as domestic. So what is the total order book position as of now? And in terms of investments, how much you are planning to invest, say in FY24, now only 1 quarter is left, and also in FY25, what your plans are?
So we are still firming up plans for FY25, but I can tell you about FY24. Our manufacturing in terms of capex, luckily for us, when we've planned our existing tower facility, for instance in Raipur, is in excess of 130-140 acres. And when we had built this plant, all our power requirements, our effluent, etc., we had planned for a much larger facility. And right now we are using a part of that only. So for us to put these manufacturing lines, because we already have all the civil work done, we have our factory done, we are just adding these manufacturing lines. So for someone who sets up just a new product line from scratch versus us, for us the cost is minimal compared to that, because most of our management and everything is already in place. So this is a huge augmentation for our EPC projects and give us that capability from an end-to-end perspective. So far as our order booking is concerned, our intention is to balance our business both in India and overseas. As the name suggests, our merged entity is called Kalapatru Projects International Limited. Our order book currently, the way the split stands, is roughly 60% is coming from domestic markets and 40% is coming from international markets. Increasingly, we want to take our other verticals and segments overseas, as I mentioned to you a little while ago, and hopefully we should balance this to 50-50 in the next 12 to 24 months, and that's what our endeavor is. So far as our capex is concerned, we had guided for around 275 crores of capex in FY24, and I think we should be achieving that capex, given the fact that we should be growing at around 25%. We had said 25%, but close to 20-25% is where we'll be at the end of the year, hopefully, growth compared to last year, and this capex will be required to meet that growth.
Okay. And as far as your ratio you said is 60 to 40, but what's the total order book right now that you have?
So currently, as of 30th September, we were in excess of 50,000 crores, and including L1, we had guided at the beginning of the year that we'll do close to 25-26,000 crores of new order inflow, and I think the way it appears as of December, we should be able to meet our target at the end of the year.
Okay. I'm not sure how much you'll be able to talk about numbers in Q3 terms, but if you can talk about your turnover and growth trajectory that you are looking at for FY24.
So unfortunately for Q3 it will be inappropriate for me to say, because we still have to close the quarter and the numbers are still not out there. But so far as FY24 is concerned, we had said that we should grow in the range of 25%, and our endeavor is to grow in that range so far as our revenue is concerned. We had also mentioned that our PBT should be a healthy 4.5% of revenue, and we are still working very hard to ensure that we meet that target at the end of the year. Order book I already mentioned to you. So I think overall we are quite pleased with the way the execution is shaping up. Order book is robust, which gives us good revenue visibility over the next 24 months. And so that puts us in a comfortable position to look for new business at better margins, because we don't have the need to fill in orders. So we are being selective with what orders we take and which segments we take, in order to have a very balanced portfolio of businesses, which will be, holding us well in the next 2 to 3 years.
Okay. One last question. Overall, how do you see your industry to perform? Not just in FY24, but even for next year, if you can talk about.
So I think there has been gradually shift in our industry in terms of execution capability. So whilst construction is always a laggard, when it comes to adoption of technology, but I think some of the larger firms like ours have been investing continuously over the last 3-4 years in technology, as a result of which we are seeing a lot more mechanization happening on our projects. Our monitoring and dashboards, etc., are becoming live and in real time. As a result of which our monitoring is far more robust. Our control and execution is far greater than it was a couple of years ago. And I think that should hold well for companies like us in the next years to come. From a execution standpoint, which is the key for us in our business to make money. If you finish your projects on time and you're doing it at the right quality with less resources, you're going to be profitable and more sustainable in the years to come.
Thank you very much for talking to NDTV Profit. It was our pleasure.
Pleasure to be here. Thank you so much.
That was Mr. Amit Uplenchwar, Director KPIL, talking about his business growth plans and outlook.